What's going on, you guys? Welcome to another video by Real FX. In this video I'm going to be giving you a step-by-step guide on how to do a top-down analysis. Now, a top-down analysis is very important because it helps you to be in alignment with the major trend. So if that sounds like something that you are interested in, stick around till the end of the video and don't forget to like the video, and if you haven't subscribed, please subscribe. Now, before we continue, guys, I'd like to encourage you to subscribe to the channel, to like the video, to share with some friends, as this helps us grow, it helps us reach many people, and it keeps us motivated to continue making more videos. Okay guys, now before we dive into the video, to make this video easy to follow through, I'm going to divide this video into two sections. The first section is going to be drawing examples of top-down analysis, and then the second section, this is where we dive into the real charts and I continue to teach you about top-down analysis while I pick up examples from different pairs in the forex market. So to do a top-down analysis, you need these three simple steps. So the first step is to go onto your daily time frame and determine the trend. And the second step is to go to the 4-hour time frame and then find your trading points or your trading zones or order blocks or QMLs. Any trading point that is significant, that is what we are looking for. And the third step is to go to a lower time frame, the 1 hour or the 30 minutes time frame, to confirm your entry and then take your trade. Okay, so I've already drawn a structure here, so you're gonna take this structure to be the daily time frame, and as you can see, the trend is a downward trend. So on the daily time frame, we have determined that this is a down trend, and we know that for sure because we have what? A lower low, a lower high, a lower low, a lower high. So this validates this to be a downward trend. So the second step is to dive into the 4-hour time frame, find the structure and also find points of interest. So when we dive into the 4-hour time frame, this is where we get to see these small structures here that I've mapped inside here. These are the small structures we're gonna see in the 4-hour time frame, and as you can see on the 4-hour time frame, we can see that we had a bit of a change of character here. So we can go ahead and label that as our change of character. And then when after the change of character, the market pushed to the downside and pushed back to the upside and then continued going back. So where would be our point of interest? Our point of interest would be this QML here. This would be our point of interest. This would be our point of interest. So this means when the market taps into this point of interest, we dive deeper into a smaller time frame. So when we dive deeper in that smaller time frame, this is what we should expect. So we're going to expect something like this in the smaller time frame. We are going to expect that when we dive deeper into a smaller time frame, we find a confirmation structure, something like this, a push to the upside like that, and then a small change of character, a retracement, and then a push to the downside. So this is what we expect to see when we tap into this point of interest here. Okay, now we're on the daily time frame. The first step is to determine our directional bias. As you can see, we were on a downward trend, and starting somewhere from this point, we were on an upward trend. Now we're going to focus on the market starting from this point going upwards. So we determine our directional bias to be an upward trend. Now we're going to go to the 4-hour time frame and determine our structure and points of interest. So on the 4-hour time frame, you can see that we're in a downward trend. This is a downward trend. The market keeps breaking structure to the downside, and then finally we took out a previous high. This simply means the market was changing structure here. We were starting to be in an upward trend because this is now a change of character. That there was a change of character. So our structure, we can see that now we are in an upward trend because now we had a change of character. Now we have to identify our points of interest. So at Real FX, we use QMLs, order blocks, and breakup blocks as a form of our points of interest. Now here we can see we had a very strong QML point. This was a QML point here, and then this was also our point of interest. This was also our point of interest. So when the market tapped into our 4-hour point of interest, which was the QML, now we dive deeper into the 1-hour time frame or the 30 minutes time frame. So I'm going to go ahead and use the 30 minutes time frame to dive deeper into this point of interest. Okay, so it's still loading. So as you can see, when you dive deeper into this point of interest, you can see that the market tapped into this point of interest, and then it broke the structure here, this minor structure here. We had a minor change of character here. This is a minor change of character, and that tells us that the market is ready to reverse. And then when the market pushes to the upside like that, and then when it pushed to the upside like that, we had a retracement. And if you check, this retracement also reacted on a QML. So this would be our QML. As you can see, the market had a very sniper entry here. This would have been a very sniper entry. Our point of interest is here, and then where is our, this would be our stop loss here. And then the market reacted on our QML, and then this is where we would have our take profit, and then this is where we would have our stop loss. And this would have been a nice 1:4 risk reward ratio. Now let's look at another example. Let's go back to the 4-hour time frame, and then on the 4-hour time frame, we're still in an upward trend. And then we can determine the structure that we have a breakout of structure here. So after a breakout of structure, obviously you expect the market to reverse. And then where is our point of interest? Let me delete this. Where is our point of interest? Our point of interest is still the QML. So we have a QML here, we have a QML here, and then when we have our QML, that QML is going to be our trading point. So when the market taps into our trading point, we dive deeper into the lower time frame to try to see if we could have gotten an entry here. So we go again to the 30 minutes time frame, now we go to the 30 minutes time frame, and then we realize that we had a tap into our point of interest. This was the first tap into our point of interest. And then after this tap into our point of interest, and then we had this change of character, and then we had the retracement. Actually, wait, we had this tap into point of interest, and then you had this change of character, and then we had this retracement. This is where we could have taken our trade. So we tapped into the main point of interest, and then as you can see, we also have a QML here. And then when we have that QML there, this is our new point of interest, our refined point of interest. So when the market tapped into this one, the market started shooting to the upside. Here we are on the Euro JPY, and then we are going to try to apply the very same steps that I gave you in order to fully explain the top-down analysis. Now the first step, I already told you, you have to determine the trend on the daily time frame. So as you can see here, we're on the daily time frame, and the trend is a clear upward trend. And then we know it's an upward trend because we are forming higher highs and higher lows. So these are higher highs, these are higher lows, and then these are higher highs, as you can see. Now we are done with the first step of the strategy. Now we are going to the second step of our top-down analysis, which is to go to the 4-hour time frame and try to find trading zones. So what we're going to do is I'm going to go to the 4-hour time frame, and I want us to focus on this range here. Now I want us to focus on this range here. So we're going to focus on this range here, because it took out the structure. As you can see here, we had a what? We had a break of structure to the upside. So this was the retracement on the higher time frame structure, and then this was a confirmation that now we are continuing with the trend. So this helps you to be in alignment with the trend. As you can see, the major time frame is saying we are on an upward trend, and also here on the 4-hour time frame we just changed the trend to be an upward trend. It was a downward trend, now we are on an upward trend. So this here would be our break of structure, signifying that we are now on an upward trend. And this is on the 4-hour time frame. This is where we have to find our trading zones. So as you can see, guys, I usually tell people to find your trading zones. You have to use the Fibonacci. I recently made a video about the Fibonacci, and then you have to look for a trading opportunity in the golden zones. I'm sorry for that. You have to look for a trading opportunity on your golden zones. So as you can see, this one here around the golden zones, we have this order block here. So we are going to be trading off this order block or of the supply. Now this one is a very good supply. This is a very good, actually it's a demand. So this is a very good demand, because as you can see, it's very clear, and then it also has an imbalance. So it simply means you can trade off using this order block. So when the market taps into our order block or our supply zone, our demand zone, we don't automatically take a trade. We wait for the market to give us a confirmation, and that's when we enter into the market. And that's going to bring step 3 of the top-down analysis. So we are going to focus on this point and try to see what happens when the market gets into this point. Now as you can see, using this strategy here, if we entered on the 4-hour time frame, we would have taken a trade around here, and then this was going to be a 1:7. Now I want to show you the power of using a lower time frame to get a confirmation. So let me delete this, and then we're going to dive into a lower time frame, preferably the 30 minutes. So let's dive into the 30 minutes time frame. This is the 30 minutes time frame, and then we're going to try to see what the market did when it got to that 30 minutes into that area. Now here we are, this is the 30 minutes time frame. The market here tapped into our demand zone, and then when it tapped into our demand zone, this was our recent structure, this was our breaker of structure here, and this was our high here. And as you can see, the high failed to hold, so it got broken to the upside. So we had a change of character here, and then after that change of character, we have multiple places that we could have taken our trade. But as you can see, guys, here we have some sort of a drive to the upside. So this drive to the upside shows us that the market is not longer going to come to around this area, and this is because as you can see here, we have no imbalance. So the market has filled all the possible trading points that you can find here. But when you look at this area, if you look at starting from the right all the way to the left, you can see that we have some very strong areas here. We have some very strong areas here. As you can see, we have many highs and many lows touching this area, and just below this area here with many touches, we have this supply, we have this demand here. So we were going to try to observe what the market does, and then when the market got into this thing here, we can see that the market reacted on this demand over here, and that's the first step. So the market reacted on that demand over there, and again, when the market reacted on that demand, the market created a wick and then started pushing to the upside with a very big candle. So this shows that the market has gained momentum. And then if you are a person who likes scalping, here you could have added more trades. So you could have taken a trade here, you could have taken a trade here, targeting this high over here, and then that would have been a 1:13. And then you could have also taken another trade after seeing that we have this strong candle here, which signifies that there is a strong momentum to the upside, which also confirms that our trade is safe to be taken. So you could have put your stop loss just below there. That would have been your second trade. And then your third trade, after we take out this structure here, guys, we also have a minor demand zone here on this black candle, and we could have had another trade on this minor demand zone here. And then as you can see, when the market got into it, it reacted off it, and then it started showing some serious momentum to the upside. Okay guys, that brings us to the end of the video, and if you enjoyed the video, don't forget to give it a thumbs up, and if you haven't subscribed, don't forget to subscribe, and I'll see you guys in our next video.